Well, Nerina, our market resuming an upward trend today, but the recent strong rally we've seen on global markets appears to have petered out just a little bit.
Yeah, just somewhat. Nothing too serious and nothing too much to be concerned about, I think. Certainly on the US side, I think the focus is all on the earnings. This is fairly typical for earnings season, where the market seems to shrug off economic news, whether they be good or bad, and rather tends to focus on the earnings numbers that are coming out. And in general, we've seen in the current US earnings season that company results have been coming in better than expected, and that has certainly provided some support for the market. So we've had a good run. There is a bit of consolidation at the moment, but when we do see some weakness, it's certainly nothing to be concerned about or too massive.
Well, just looking at some of the economic data that has been coming out, we had some housing numbers earlier this week that looked pretty good, but consumer confidence in the United States still under pressure. We had those durable goods numbers out yesterday, also disappointing. So do you think the economic data we've seen coming out is backing up what we're seeing on the corporate front?
Certainly not what we've seen this week, and I think that is where the caveat sort of sits around the current earnings forecasts and the earnings numbers that are coming through. And I think that's maybe that we just need to keep in mind for the slightly longer term, that although the focus is all at the moment on the earnings numbers, and those are good, unless these good earnings and all the stimulus that is in the market translates into sustainable growth in the US economy, we will see some downside risk to the equity markets. We will also see this afternoon the latest US jobless numbers coming out, so the market will certainly be watching those, but I think the market is really looking for relatively unchanged numbers from the previous release, but the focus will remain to be on the earnings numbers rather than the economic numbers, but we definitely need to see it coming through into the economy. And currently the indications are certainly that a slightly sluggish recovery, not recession, depression, anything like that, but the recovery slow, sluggish and subpar. That's really the global picture that's being painted out there.
And of course, while all these companies appear to be doing very well, the market really needs to see them starting to employ more workers and really putting their money where their mouth is, doesn't it?
Very much so, and just on this week's results, it would almost appear as though maybe Europe is as one step ahead of the US in terms of that, specifically in the motor manufacturing sector. We had some very good results out of Volkswagen today, as well as from Hyundai in South Korea. So in Asia and in Europe, certainly it appears as though they are able to translate this very well into the earnings side of things, and certainly the consumer confidence numbers and some other of the economic figures in Europe and in the EU in particular, Italy, maybe it's on and Spain, maybe it's on the back of their good sports performances, but certainly they seem to be producing slightly better economic data at the moment than the US is able to do.
And of course, the focus really seems to have shifted from the European economy to the US economy, because of course we know that Europe is putting in all these austerity measures. But we had numbers out of Germany last week. We had the FO business confidence numbers, we had manufacturing numbers out of Germany, and it looks like Germany is really benefiting from the weakish euro, but also a rapid pickup in activity.
Very much so, and I think it's really on the back of those numbers that we've seen some very good strength in the euro over the last week or so. So it's certainly the combination of slightly worse than expected numbers out of the US and then better than expected numbers out of the EU that is supporting the euro at the moment. It's also the risk appetite that I think is just generally better because of the global scenarios I've painted it now. And what you're finding is that Germany in particular is looking very, very good in the European scheme of things. When we're looking at the bond yields in particular, the spread between the German bunds and the other European yields, there's certainly an opening up of those, and it's not only because some of the big countries and some of the other countries that presented or potentially presented with some problems that their yields have been under pressure, but the German bunds and the German yields certainly have presented very good opportunities in recent times.
Of course, we have seen that risk appetite supporting our markets and also the rand. The rand still trading around that 7.30 level against the dollar. What about the numbers coming out of the South African economy and also the few corporate earnings that we've seen starting to trickle in?
It's a huge week this week for as far as economic data is concerned in South Africa also, and we've certainly seen on both the inflation front and on the money supply front, all numbers that are put into the MPC's pot when they look at interest rate decisions. Up until today, we saw numbers that were certainly pointing to a better or improved scenario for a rate cut. I say up until today because, of course, just half an hour ago we got a PPI number that was massively higher than the market had expected. Now, what we've seen over the last couple of weeks and months is incredible support from foreign investors into South Africa. Over the last 18 months, we've had as much as $100 billion flow into our equity market by foreign investors. Just in July alone, into our bond market, we've seen 20 billion rand being invested by foreign investors. This is the large part where the strength in the rand is coming from. Now, for many of these foreign investors, it's about the yield play. It's about the positive interest rate differentials that our market represents relative to the very low rates and yields that they can get in their own developed markets. Now, this is where the play comes from in terms of will the MPC cut at their next meeting or will they not? And I think there's a bit of a tug of war going on at the moment where some of the economic data of this week was pointing to an improved chance of an interest rate cut, whereas today's PPI was saying maybe not. Now, if they don't cut rates, bear in mind that that's a very good scenario for continued foreign inflows because they will continue to enjoy this interest rate differential that they have enjoyed for quite a while. That means strength in the rand, which means even lower or more downside risk. And if I say downside risk, I mean a good inflation number from the imported side of the equation. So quite an interesting number of factors that play a role in our interest rate and inflation rate outlook.
Of course, we've had a little bit of a taste of our corporate earnings season. Nedbank, the most recent to come out with some numbers. We saw that share price responding favourably initially yesterday, but then retracing some of those strong gains.
Yes, the market at first looked at the very first sound bites and the headline numbers that came out, which said, very good, 70 to 90% higher than previously. And on the back of those, the market reacted very positively. The price jumped. And once the analysts and the traders were able to start looking through the numbers a little bit and put on sort of their forward-looking glasses, they realized that maybe this was a bit of a once-off in the sense that some of the reasons for the good performance that we've seen and on a forward-looking basis for the second half, we will not be able to repeat those, because certainly in the fourth quarter of last year there were some once-offs in the light of massive asset write-downs and so on that will not be repeated this year. So I think a bit of a sanity check and a reality check there, and we saw quite a bit of a pullback then from those heady highs in Nedbank yesterday.
Nerina, we have to leave it there. Thank you very much for your insights this afternoon.